Hey, what's up guys? Bitcoin is the only asset in the world that has no leaks in this system. In this video I will explain why this is the case, then finally we will take a look at the Michael Saylor first Bitcoin price prediction. First, let's take a look at this beautiful chart. This chart represents Bitcoin energy, a raw joules alone that can be used to estimate Bitcoin's fair value. Bitcoin's energy value has these three variables. Energy input, which is hash rate multiplied by mining energy efficiency. Supply growth rate equals annual increase in Bitcoin in circulation. And fiat factor, which is a constant conversion factor that allows the fiat USD value of energy. It can be calculated as follows. Bitcoin's energy value equals energy input divided by supply growth rate and multiply by fiat factor. In the end, we will get a precise Bitcoin energy input that is represented by this red line. We can see that this is a highly correlated with Bitcoin price. R2 of the model is 80%. R2 is a statistical indicator that measures how well the model fits into the data. Also, we can interpret this that Bitcoin price has 80% chances to follow its energy input model into the future. It's clear that the value of Bitcoin is a function of its energy input. We can see that when Bitcoin energy input increased, the Bitcoin price increased as well. This is what we saw in 2017 bull market run, and when energy input slightly dropped, Bitcoin price dropped as well. Right now, according to this chart, it looks like the Bitcoin energy input and the Bitcoin price align perfectly together, which means Bitcoin is fairly priced. So if you're thinking to buy Bitcoin this deep, it might be your chance. Also, we can zoom out a bit and look at the bigger picture. This is the same energy input and Bitcoin price, just in a longer time frame. We can closer see the correlation. However, you may notice that in 2013, we had this huge dump in energy input. The main reason why this happened is because the miners were switching from CPUs and GPUs to new ASIC mining, which are much more efficient and 100 times faster. After the switch, energy input took off. So, we can conclude that the increase in electrical energy input will increase the fundamentals value of Bitcoin. The more Bitcoin miners comes to support the Bitcoin network, the more hash rate and difficulty adjustment increases, the higher Bitcoin price will be in the future. Mining Bitcoin for an average individual is not easy, and it's very high capital intensive. This is why I partner with RRMine. RRMine is a global computing power and one of the top cloud mining companies with the data centers distributed around the world, providing computing power to more than 100,000 long-term users. Currently, they have special offers, contract prices ranging from $14 till $425. However, it is recommended to purchase $14 pack to start with. User can check the daily mining profit from RRMine app. For example, BTC 30-day plan has daily earnings of around $1.82. This is based mostly on the current mining difficulty and BTC price. Its business model was tested and it's been running for the past 4 years. The mining profit is split 50-50 between user and the platform. The platform is following the all regulations and laws to minimize legal risk. Sign up with the link in the description box below and start mining Bitcoin today. Now, let's take a look at some great Bitcoin news. JP Morgan says gold will suffer for years because of Bitcoin. JP Morgan is one of the Wall Street banks that predicts a major shift in gold and crypto market as digital currencies become increasingly popular as an asset class. The trend possesses a problem for bulls in precious metals market over the coming years if investors move, even a small slice of the allocation away from gold into crypto. The adoption of Bitcoin by institutional investors only began, while for gold its adoption by institutional investors is very advanced, wrote the JP Morgan strategist. MicroStrategy to raise $400 million to buy even more Bitcoin. Michael Saylor already bought close to 41,000 BTC and now they are looking to buy even more. Also, if you look at the MicroStrategy stock, we will notice that the stock starts to increase drastically when Michael Saylor first announced that he bought a large sum of BTC as a treasury reserve asset for his company. First purchase he made in August and since then his stock price took off. It more than doubled. However, before this event, MicroStrategy stock was flat for almost 2 decades. Since August, Michael Saylor was very vocal about his Bitcoin purchase on Twitter. If we take a quick look at this chart, we will notice something very interesting. In August, Michael Saylor made his first purchase of Bitcoin of $250 million for MicroStrategy. No one really paid attention to that. Soon after, he announced that he purchased $200 million worth of BTC personally for himself. More people start to pay attention. He got more likes, he got more replies, and of course he got more retweets. Then third time, just recently he bought $50 million worth of BTC for MicroStrategy. And we can see that replies, retweets, and likes skyrocketed. It's interesting to see as Bitcoin purchase decreases, the popularity increases. So he totally spent $500 million on Bitcoin in those 3 purchases. His 41,000 BTC purchase is now worth $740 million. 50% ROI since August? Not bad at all. Just recently, Michael Saylor had a great interview with Binance. I have seen all his interviews before and he was always shying away to make a Bitcoin price prediction. But in this call, he finally did it. Let's take a look.
Awesome. And you've got some great ideas on that. So do you want to share with us how you think we can 10 times, 100 times elements of the Bitcoin economy?
Well, I think that it starts by rotating from one narrative, which is, well, Bitcoin is a very interesting uncorrelated digital asset with high volatility, with high potential returns, and you can put 1 to 2% of your portfolio into it with or without leverage. But that's one, that was a narrative, you know, and the speculative narrative was predominant before March. But that's not going to appeal to 99% of the investors or the money in the world. They want something different. They want Bitcoin is the ultimate synthetic long-term treasury reserve asset. It's an engineered safe haven asset, engineered to be superior to gold in all aspects of a bearer instrument that's a store of value. And if I go from one to the other, then I'm not talking about getting 1% of the money from 1% of the investors. I'm talking about getting 50% of the money from 100% of the investors. Okay, so what does that mean? Well, I mean, it means that the people that we want to appeal to are the people that put their money in gold because they don't trust fiat instruments. So there's $10 trillion there. So they'll be looking at, you know, how does Bitcoin compare to gold? How does Bitcoin's volatility compare to gold? Returns compared to gold? Trading liquidity compared to gold? Etc. How many people hold Bitcoin versus people that hold gold? I think the second big, by the way, and that's $10 trillion, right? So that gets you a factor of 20 to 50 there. The second bucket is people with bonds, $17 trillion of negative yielding debt, $100 trillion of 0 to 3% yielding debt. Why are you putting money in bonds, sovereign wealth? It's a safe haven. So people's reaction is the market gets scary, they run to a safe haven. I think it's pretty important in the crypto industry, and with regard to Bitcoin, you position Bitcoin as the ultimate long duration safe haven asset, so they run to it instead of running to sovereign debt. Mm-hmm. That gets you, again, another factor of 10, 20, 30. And then finally, you've got a pool of big tech investors. You could argue a lot of people are using big tech like Tesla, Apple, Amazon as a store of value. They've lost faith in the currency. They know they can't invest in negative yielding bonds. They're not quite sure about gold. I mean, gold is defective. It's an antiquated store of value. It was the best store of value for 5,000 years until we invented the computer, ZZ, right? Like, yep. It's like the Canon camera was the best way to take photos, and we put photos in shoeboxes in our attic until we invented the iPhone. It was a good idea until it became not a good idea. Libraries were a good idea until Google gave away 1 million books for a nickel for everybody on Earth. And then it became not so good an idea. And so what you've got here is people running to these things, like they're running to big tech, they're running to gold. And I mean, I don't know why anybody would run to bonds, by the way, like sovereign debt yielding negative. I can't figure that one out. But they're all looking for a store of value. Add up those three, it's $150 trillion. Bitcoin is 0.1% of the ocean of investable assets. 99.9% are in the asset ocean, and we're talking about 0.1%. So we need to carve a channel between that ocean and that pond, and we need to tell people it's safe to convert your gold to Bitcoin, your low yielding debt to Bitcoin, your big tech to Bitcoin, and this is a compelling idea. I think that's how we grow the industry.
So, first part of his Bitcoin price prediction comes from gold. And we know that gold has $10 trillion of market capitalization as an asset. As I mentioned earlier, even JP Morgan announced that gold will suffer for years because of Bitcoin. Second part of this equation is bonds. As we know, for more than a decade, Fed fund rates were approximately at 0%. There are around $17 trillion of negative yielding bonds, and $100 trillion of 0 to 3% yield in bonds, which is in real terms is still negative yield. And the third part of this equation is the big tech companies that are worth trillions. If we add all these three components together, we will get roughly $150 trillion of total market capitalization. Imagine if Bitcoin would take all these markets, how much would single BTC will be? Right now, Bitcoin's market cap is at around $330 billion. To make the math simple, let's take 150 trillion and divide that number by 330 billion, and we get 450x. 450x would put single BTC over $8 million. It's unimaginable, but it's still possible. However, it may take 100 years to get to that price point. Let's take a look what Michael Saylor has to say about the time duration.
Look, this is God's gift, right? This is the perfect instrument for someone that needs long duration. So when I look at anything, I look out 100 years, CZ, and then I look out 30 years, I look out 10 years, you know, and if you need to leave wealth to your grandchildren in 30 years, how are you going to do it? And if you needed to leave it to your great-great-grandchildren in 100 years, how are you going to do it? And you cycle through, and you're like, well, real estate's going to get taxed away, and maybe the regime will fail, and you can't carry your real estate from one place to another place. Companies are getting taxed on income tax, employment tax, tariffs, etc., and they've got corporate risk, and they've got massive competition. You can't be sure any company will be in 100 years.
Yeah.
You know, then you've got bonds. Well, every bond is, unless it's growing faster than the money supply, it's diluting. So you're going to lose most of your bond. Then you've got gold, and you know, gold miners are going to print it, you know, 2-3% a year, and then it's corruptible, and you can counterfeit it, you know, they're derivatives, and they're not backed one for one. They're fractional derivatives. So you're on this mad dash. How do I find something that I can hold forever? Mm-hmm. And a lot of times, you know, individuals that are trading, they're thinking forever is 30 days, right? Like 3 days, you know, like 3 months, 3 years. Like, no, who thinks past 3 years? Well, pension funds by charter, they have to think 30 years.
Yeah.
They have to think 50 years. They have to think, you know, 100 years, a durable thing. So find me the best long duration store of value in the world. And the answer is every single monetary network, the fiat networks, bond networks, stock networks, real estate networks, they're not closed systems. You can create more of them, which means that they have a leak. They bleed energy 2% a year, 3% a year, 1% a year, 7% a year. Well, Bitcoin is the one thing that's a closed system. You can't create more than 21 million coins. You might slightly decrease the amount, but they're never going to be more than that.
Yeah.
And the definition of a closed system is you can't put mass in. All you can do is put energy in. Mm-hmm. And energy is monetary energy, right? It's money. So as monetary energy flows into Bitcoin, it sits like in the network, like a monetary battery. This is a battery that will hold a charge for 100 years. That's the big idea. The institutions are just now starting to wake up to this idea that If you put your energy into a real electric battery, it drains 2% a month. You're going to lose 24% of your electricity in a year. You put it into a gold battery, you lose 3% a year. You put it into Bitcoin, you're not losing any energy. That makes it so superior for every pension fund, everyone looking for long duration, that once that message gets out, they're going to stampede to it. It just is a matter of education and them getting comfortable and then solving all the on-ramp issues, and making it easy for them.
I really like the analogy of the closed loop system. Right now, every financial asset around the world has a leak in it, and it began with fiat currencies that bleeds monetary energy. Bitcoin is the only decentralized closed loop system in the world without any leaks. It's like a ship with the leak trying to cross Atlantic Ocean. How far it can go before it drowns. On the other hand, if the ship does not have a leak, there is a 99% chance that it will make across the world safely. So the choice is yours, to buy an old rusty boat with a leak in it, or perfectly engineered new one. I think the answer is pretty clear. Let me know, what do you guys think about this crazy Bitcoin price prediction? Is $8 million possible for Bitcoin? Leave your thoughts in the comment section below, smash that like button and subscribe for more videos.